Good afternoon, traders. This is Christian from Extravagant Trade Group, and this is your end of day market recap for tax day, April 15th. I've got my orange red shirt on for today's price action. Obviously, a lot of red on the screen. Also, big move up in the VIX today. So, what I'll try to do in this video is just kind of give you a sense of whether this market is showing healthy signs or unhealthy signs, distribution signs, and then we'll go from there. That's the best that we try to do. Basically, is just kind of give a sense of whether this is a good looking market or if it's not and showing a lot of distribution. And then as always, we formulate a trading plan and go from there. Risk disclaimer in front of you: everything that we're going through is for information purpose only, not giving out any advice or recommendations. Everything that we're going through in this video is for information purposes only. And, I'll try to give you a kind of macro viewpoint, which I think is basically what we've got right now is a pretty macro tape. A lot of reversals for the day. I do have to update this a little bit. I apologize, but bonds. So here's a couple things. Here's how today unfolded. We had a better than expected retail sales report. Some of this, is in the rearview mirror, but we are seeing mixed signals in terms of the economy. Remember, last week we saw that the small business optimism was at an 11-year low. So clearly, there's some things there's some areas of the economy that are not doing well as some other things. Now, I was off on Friday, and it been a long time since I've taken off like a whole day on Friday, and obviously we had another reversal. And that's just basically how this market has been playing out over the last few weeks, is that we've been seeing this, right? This isn't so, even though today's price action was a little bit more dramatic to the downside, but this has been the case of what we've been seeing now for weeks, right? And the best thing I could kind of tell you for that type of market where every little uptick or positive price action is getting faded either that day or the next day is just to kind of sit and be patient on the long side. If you're playing things on the short side and hedging a little bit, those things are obviously working in this type of market. Or fading moves, right? I mean, that's kind of what we're seeing right now. It's what I talked a little bit about over the weekend. It's just fading moves right now, fading strength. But retail sales did come in higher than expected. I was going to mention that I took off on Friday coming back from the airport. Airports, it's not like I'm seeing weakness too when I'm out. The airports are super packed. It's tough to get Ubers. So, it feels like this market right now is just kind of going through a phase. Now, the other thing to kind of consider too is that we did go up. The market went up for about 4 months, and sometimes that's the way it works, right? Everybody thinks that the market's going to do one thing, and geez, it shouldn't. It really went up for longer than I think most people envisioned, right? And that's why we follow the trend, rather than trying to play a whole bunch of reversal trades, as the market went up in November, December, January, February, and part of March as well. So now we're seeing dip/correction. Doesn't matter really what you classify it, but we're seeing the market more act more like a bear market. And I'm not saying we're in a bear market. I don't really like I don't really like to classify things as a bull market or bear market because people get really anchored to that. But we know what a bull market feels like, and we know what a bear market feels like. For example, in a bear market, rallies get sold, breakouts fail, right? And you're seeing just more things moving to the downside, right? And that's something that we talked about. We've been talking about since this transpired, which is the NYSE and the NASI, right? These things, these summation indexes really kind of give a sense of whether the market is acting very healthy when more things are going up or more things are going down. And while this was kind of a weird situation where this line was kind of going up, but clearly not the same as we've seen in the past, it was just kind of edging higher like this. But clearly, over the last couple of weeks, we've seen a change in tone. And by the way, this is not updated for today, so it's gonna look worse than what it looks like right now, because this is from after Friday's price action. But regardless, it gave us the signal that something was changing in the market, like here and in here, and just deterioration, right? And then if you look at the the breadth for the day, right? And I tend to look at the 4-week new highs versus new lows, because, rather than 52-week, because you're going to see things kind of evolve faster when you look at this. And you only have six new highs today, and you have, 237 new lows. And so this is the worst I've seen this in terms of in terms of new lows. I think that's the biggest count of new lows that we've had in a while. And you could see what's happening here, right? This market has really, and this is a word that I used not last week and not last weekend's macro note to members, but the weekend before, is that we just started to see deterioration in some areas of the market, and that's really kind of the situation. And again, this isn't updated for today either. So that's the situation. And I think it looks, when you look at the breadth for NASDAQ, which had 82 new highs and 1,000 new lows today, and you look at this chart, right, you're also going to see that the new lows have been really outweighing the new highs. Look at the distribution go lower and lower on the new high side, right? Versus what we saw last year, towards the end of last year, was a big expansion in new highs in the middle of December. So, again, a lot of that had to do with the Fed meeting and so forth, and a big up move in small caps with the possibility of the Fed possibly cutting interest rates. But obviously, we've known that hasn't come to fruition. So that's a little bit about, usually I start with the price action, but I'm starting with some of the under the hood indicators, because they've helped, and that's how we kind of use that, right? We look at both. We look at what the price action is telling us. We also look at what some of these indicators are telling us, or studies, and also in terms of what sentiment is telling us as well. So I was going to start with where we saw the market kind of break down first last week, which is basically, let me just move this out of the way 1 second here. All right, so I'm showing IWM because this was kind of the first thing to kind of, in terms of the major indices, to break down, and it might be one of the first to stabilize too. We'll see. Down here, there's a virgin point of control, so this could be where we're headed. The other thing that's tricky right now too is, when I put out my macro note over the weekend, I talk about long term and I talk about medium term. Long term, like all of these indices, we've advanced so much that we're so far above the value area for the year that there's quite a distance if this correction continues, or if this dip continues, before we really hit any major support. So for example, like 185.85 is the top of value for the year, right? And that's still 5% away. Now, I'm not saying that we're going to go down there. We have to see what we do at this virgin point of control first, if we get there. And then we can kind of see if we're going to stabilize. But that was the first thing, as well as Dow stocks, which also, that's a nasty looking candle for the Dow, which had a bearish engulfing. So these things, and again, I've seen this happen multiple times, where we are seeing where the small caps and the Dow stocks act similarly. And which is odd, because the Dow is 30 large cap stocks and IWM is 2,000 small cap stocks, but they both kind of gave you that signal at the same time, breaking the 50-day moving average, breaking the value area, right? So now we're trending lower in the current scenario, right? Again, not long term. We look at the weekly chart, we're still way above the value area for the year, but in the short term, we could be taking out some of these levels to the downside. Let's go Qs next. Qs have been kind of frustrating because they haven't gone anywhere. So, there's no, like, I understand, like, some people are doing victory laps because they called like a put or something like that. But, the Qs haven't done anything, right? So even if they were up in the other direction, I still wouldn't be doing a victory lap if they move the other direction, because they really haven't gone anywhere in the last month and a half. So I think it's been that's kind of difficult for traders on both sides, whether you're more skewed to the long side or the short side. When you go sideways, there's not a lot of edge that you can really, extract from the market. But here's what this looks like on the weekly chart. Now, of course, we're way above, but you kind of see now this rounding top. So do I know where we're going to stop here? I don't. And this is the first day of the breaking of the April value area. So, it's just reducing risk. And if you did this along the way, if you kind of caught some of the warning signs, then you're probably going to get through this a little bit better, right? And some of those signs just really kind of help a bit. Here's S&P futures as well, which oops, let me get over to funds and take this out here. But so this was the other, both the Qs and the S&P were acting differently than IWM and the Dow, and they were both above the 50-day moving average, both inside their value area for the month. But another gap up and fade today. And a tricky market. It's tricky when the market opens up, on the highs, and we've seen these gap ups over the last few weeks, where every time that there's been, I believe just about every time that there's been a gap up, it's been faded, right? So again, symbolic of how a bear market feels. Again, doesn't mean that we're in a bear market, but that's often what we feel. So notice that there's a virgin point of control coming in there, so you might see some stabilization when that happens. But clearly, once this channel broke, right, that was another sign that the market, once the uptrend channel was broken, that the market was going to start acting differently. And it had a couple attempts to kind of regain this top of value and get back into the uptrend channel, and notice it was faded every step of the way. All right, a couple other things too to realize is what's going on with the VIX, because we always go, well, I don't want to say we always, but there are some indicators and some things to kind of watch. Any dip or market correction, right? We want to be watching what the VIX is doing. We don't want to see like a full on green candle or full bar, right? A lot of times what we've seen in the past is when there's a bout of volatility, right? You see these long wicks on these candles. We're not there yet, so the VIX got to a 19 today, and I don't basically technically chart the VIX for like patterns or anything like that. I'm just noticing what the level is telling me. So number one, I look at what the level is telling me, which is 19, which is out of this area that we were trading in before, which was pretty low volatility, 14, 15 in that area. So it's a change in tone, right? And then what we want to see is for the volatility to kind of like maybe move up and then kind of fade. Similar to like what we've seen, a couple times in here, right, where the volatility just couldn't go higher than like 25, right? This was, of course, back last year. Interesting, almost, not the same exact time, but that was in March of last year, right? And then, of course, this was a little bit more prolonged, September, October, even though the VIX never got to 25, but it does look and feel a little bit different. Right. Another thing that I like to look on days like when the VIX is really moving is to look at the volatility of the VIX itself, right, which is the VVIX, right? Also taking a look at what this is telling you. Now, again, it's a little bit of a mixed signal on Friday with the VIX kind of with the VVIX long wick on this, but notice how the trend is still intact in here, right? So that's a big move in this VVIX. So this, as well as a couple other things that sometimes bonds will basically act as a flight to safety, right? They were not acting like that again today, and that's a further breakdown in TLT. We talked about, this was our chart of the day. As this was breaking down, I'm not sure if I had this out. I think I probably had it once last week and once the week before. Bonds are important, right? And we've gotten out of this consolidation, and we've resolved lower here, right? And what we're seeing is, that's why I believe small caps went down first. Small caps have been acting a bit more correlated to what the bond move. As rates go higher, small caps get hit a little bit more, just because of their balance sheet is more vulnerable. They're carrying more debt many of them, right? So that's a break, and we don't really have information yet about where this is going to play out, where this is going to stop. There is a virgin point of control down here, so it's a logical place for some digestion. It could also be a reversal point, but we don't know yet, right? So this is not so we're going one by one and through some of these things, and higher yields is a headwind, right? So I thought it was very interesting that you didn't see much of a bounce with TLT today. Even though that because sometimes when that volatility does go higher, you begin to see bonds rally a little bit as a flight to safety. Also the dollar, right? And look at the dollar futures here, right? This has also been legging higher too. So that's also indicating risk off, right? So all of these things, what we're looking for, just as the market is going up, we're looking under the hood and looking at some indicators when the market's going up to say, hey, is there some divergences? And same thing when the market's moving down, like it has been recently, start to kind of look at what the dollar is doing, bonds, the VIX, and are we seeing any major divergences right now? No, we're not. So I think, therefore, in my opinion, and I'm not giving advice or recommendations or anything like that, but you just basically try to just sit on your hands and not get overly exposed on the long side right now while this is taking place, and that's just how it operates. And again, if you take a step back and realize how long this market was going up for without any major check back or any major volatility, right? It's this happens, and usually once a year you get a 10% correction, right? So I can't tell you if this is it, but it happens every year. So I wouldn't get overly worried about these moves at this point. If you're taking the necessary steps where you're not overly exposed right now, or if you've taken some money off the table, then you're doing what you're supposed to be doing, right? If you're overexposed right now, and you're not reading some of the signals, then this is something that you need to work on, because these things have been telling you this for now a couple weeks. The break of the uptrend channel, the McClellan summation index, right? The breadth that we're seeing, rallies getting faded, right? Breakouts not working. All of these things should be checking boxes for you, saying, hey, this market's not acting the way it should be. Just wanted to take a look at what gold did today too, and we'll look at Bitcoin too. But gold obviously stepped back up again. Tough when you look at Friday's price action, because there was a lot of crazy, the volume that was in GLD on Friday was huge. But one of the things that I say, even though this looked like the makings of a reversal bar, if you don't break that 5-period moving average, it's not a reversal bar, right? So you always, like, to me, I always look at like what that candle looks like for a day. And if you don't break that, and then I look at like the 5-period moving average, so that helps me spot the trend or a trend change. And if price, even though if it gets like a crazy looking wick like this, and still it hangs on to the 5-period moving average, it's not a reversal. All right, and crude, we'll look at a couple other things here really quick, because I'm not really going to go over single stocks today, too many macro moves. But crude hung in there too. Still staying, kind of came all the way back into 84 and still staying heightened for a little bit. Also, so I think that this, before even this global, the Middle East escalation conflict, whatever you want to call it, before that started, right? So I wouldn't blame all of this on what's going on over there. I think it's just kind of adding to the volatility, but we started to see this weeks ago. So I don't think that is everything to do with what's going on in the Middle East. I think the market was already showing signs of weakness before this happened. Like I said, this is just kind of adding to it a little bit. So if you can kind of get out of the way of this, because what will happen, this will resolve it. All of these conflicts usually resolve themselves one way or another. We, of course, don't want to see them resolve in a nasty way, but they happen from time to time, and you just kind of have to realize that most of them, they're not going to go away in one day. It's usually a couple of days, a couple of weeks, sometimes longer. So you've got to be patient and wait for signals to develop. The other thing too is this market will turn to more of an earnings focus once some of those headlines start to kind of leave the screens a little bit. But it's going to be more important, like what these big companies are going to be reporting, right? And that's going to set the tone for potentially new market leadership, or it might be more of a difficult market. We don't know that until the earnings reports start to come out, and how they respond to the street's expectations. I think I was going to show one more chart, but I think that's good for today. All right, guys, have a great night, and again, be patient with this market. This kind of stuff is a regular occurrence. Markets don't go up in a straight line. They don't go down in a straight line, right? They back and fill and so on and so forth. So, if this is scaring you, then, you have too much risk on, and too many positions on, because this is a very familiar thing that markets do. All right, guys, have a great night. See you tomorrow.